The stock market is littered with these broken regional and national banks that make us feel bearish about the tape, even though the average has been unstoppable this month. Given that tech represents 28% of the S&P 500, maybe the nearly 13% that's financed doesn't matter, but healthcare is also roughly 13% of the S&P, and right now that's in chaos mode. With so few of them able to advance going into an election year, where the whole industry often is the target of criticism, especially from the Democrats who control the White House. So we need the financials here to rally. Yet extraordinarily, many of these stocks are still mired at levels that we saw during the mini banking crisis this spring that took down Silicon Valley Bank and First Republic. What's wrong with this group? What's alien? Now, some of it's the regulators. Right now, every banker lives in fear of being caught doing anything risky because the regulators got caught with their pants down, so they've gotten a lot more aggressive. Some of it's where these banks invested their funds when interest rates were lower, namely longer-term bonds, where you might not need to, you might need to wait decades. They can't get it out now to cash out and get all their money back because they're down big on it, huge losses, and that's one of the things that killed Silicon Valley Bank. Now, some of it's the inability to make as much money off our deposits as you might expect. We also have no mergers whatsoever, even as the regional banks should be getting together to save costs. While outfits like Toronto Dominion should come back and buy solid banks like First Horizon, something that would have been great for First Horizon shareholders if not for some regulatory issues on TD's end that caused that great deal to be blocked. The stock's half of what it was. But I've been thinking as I watch a firm soar in its buy now, pay later formulation, it seems to have struck gold this Black Friday. How did the banks, all these banks, not get into these fantastic fintech growth businesses, hook, line, and sinker? How could they not have been PayPal, which makes a little money from a huge amount of transactions every single day? How could they have seen a point of sale to outfits like Toast, where if the big banks offered a product, they could own the register of so many businesses? How did they miss the great parts of Square, now known as Block, that are so good for small business sales? They could have offered so much that Intuit has given us. I like that quarter tonight, by the way. I don't want to hear that they aren't allowed to innovate. These banks could figure out a way to do more. They could do it if they were more creative, and they would have gotten permission. Heck, the government should want them to do it. Then they could regulate these financial technology businesses right now. They're pretty unregulated. I know that Goldman Sachs tried to become more of a consumer bank with Marcus for personal loans and high-yield savings accounts, and for Green Sky financing home improvement projects. It bought that largest fintech platform, Green Sky, for home improvement in September 2021. Then they sold it 2 years later. You know what? That actually made sense. Goldman was probably the worst fit for that kind of business. It prides itself on serving whales, not minnows. They never should have moved into it. Now, there are plenty of ways for banks to get involved in these areas. Hardly a day goes by when you don't ask about SoFi during the lightning round. Young people are opening accounts there like mad. I don't like the huge option business that Robinhood clients offer. Too many losses for those clients. But Robinhood has the right demographic. Put simply, traditional banks know how to lend. But investors know to avoid any company that lends money when the Fed's raising interest rates like mad as they are now, at least until we get to the end of the tightening cycle. And even then, they seem to only want a firm. The bank simply missed an entire generation of customers, the ones that's now taking over. Hey, look, I know Bank of America has some very good programs that are like PayPal. It's got a great app, too. But that's not enough. I was stunned, for instance, when we owned Bar San Miguel small plate restaurant in Brooklyn, and no bank competed for our registered business, even though I wanted them to. I would have been thrilled to give it to them, but they got to try. When we look back at this era of stagnant bank stock prices, I think we may have to conclude that unless something changes, they've become an anchor to leeward in a market desperate for a broader firmament. I like to say there's always a bull market somewhere, and I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Last call starts now.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.